Hey everyone, this is Jay, also known as jaynemesis from eToro, here to give you a weekly update for week 11 of 2018. It's been a pretty crazy week, you guys will see in a minute. So, top news this week. AMD security flaws. There has been an awful lot of drama surrounding this. I did discuss it briefly on my stream and show some of the stuff surrounding it, so if you want to find out more about it, you can head there. Google is set to ban cryptocurrency advertisements starting in June, and Dash have released a new demo of Evolution. Weekly stats for this week: we have 40 closed trades and minus 6.1% realized profit, so quite a lot of trades closed there, and I will discuss that later on in the video. Crypto news. So there's been quite a bit going on in crypto this week, much like last week. Dash has released a new demonstration of the capabilities of Evolution. Evolution, for those of you that don't know, is a bold project by the Dash core team to try and entice users into its ecosystem by making everything a lot more user-friendly and making it easier for developers to build on top of the Dash network. So the first app that they have built as a proof of concept is something called Dash Pay, and this is effectively a new level of wallet, basically. So instead of copy and pasting long strings for addresses to send people funds, you can actually add people as contacts in your wallet, and all of this information is saved on the blockchain. So if you lose your wallet or whatever and you restore it, you still have all of your contacts saved and all of that kind of stuff. It's really useful. It's pretty cool. You use usernames. It's an interesting technology. It uses yet another layer built on top of the Dash network to do it. And there is a big video that explains all of this. It's quite technical, so if you're not a techie kind of person, you may not want to watch it. But if you understand at least the basics of how cryptocurrencies work, I guess, then it's a pretty interesting watch. So I'll leave the video link in the description. Next up, the G20 have spoken out on crypto regulations. So Mark Carney, who is actually the head of the Bank of England, also the chairman for the FSB, spoke just before the G20 summit that's taking place today, actually, and discussed cryptocurrencies. So cryptocurrencies are being spoken about on Monday and Tuesday at the summit. It's on the agenda twice. And effectively, Mark was saying that he doesn't believe that cryptocurrencies pose any major threat to the global financial system. Which is kind of good and bad news, mainly good news. The market's certainly pretty happy about it. This news broke late on Sunday, so the market's rallied quite heavily on the news. But basically, what he's saying is a couple of things. He's saying, first of all, that Bitcoin is not currently in a big bubble. Second of all, that he doesn't think that it is posing a major threat to the global financial system. There's not loads of debt tied up in this or anything like that. And third of all, I guess it's kind of interesting that he's saying that realistically he doesn't think there needs to be major regulatory action regarding cryptocurrencies at the moment. So effectively, he's pretty happy with how most countries are dealing with it at the moment, which is pretty much just taxing it like an asset or a currency. Interestingly, the USA, Japan, and France are all pretty keen to try and sync up on how they regulate. Obviously, the US is quite harsh at the moment on ICOs, especially with the recent news from last week, whereas Japan has taken a different approach, and pretty much the only thing they are really concerned about is money laundering, but everything else they're kind of letting people innovate and go nuts. So it'll be interesting to see what else comes out of the G20 summit and see if anything else happens, but I'm not expecting anything major. Finally, Google have banned advertising for ICOs, among a few other different things such as CFDs and spread betting. So this is interesting, kind of following in the steps of Facebook, and it's rumored that Twitter are going to do the same thing as well. They've been cracking down on accounts on Twitter recently that are tweeting a lot of fake news and FUD and scams. But basically, Google have said that in June they will stop allowing anyone to advertise ICOs and cryptocurrencies. I suspect this is probably to do with a lot of the more scammy ICOs, things like Plexcoin, BitConnect, obviously, Davocoin. There was also, a wave of advertisements going around on YouTube for what is effectively, scam coins. So overall, I'm actually kind of happy about this. Um, I think it's good that, you know, effectively a cryptocurrency will have to gain adoption through its own merit rather than just advertising itself everywhere. The other interesting thing about this is that there is a cryptocurrency called ADEX, and ADEX it stands for Advertising Exchange, and it's basically a decentralized network for exchanging advertising revenue and payments and adverts effectively. So it's pretty good news for them, obviously, because between Google and Facebook, they control a huge amount of the global market for advertising. So I think good news for that cryptocurrency specifically, which is trying to decentralize the entire industry of advertising. Yeah, not major news, but definitely worth mentioning. On to the stock news. So last week I discussed AMD and some potential market manipulation going on. This week there is a lot more drama with AMD, as there are now security flaws, quote, that have been discovered in all of AMD's new Ryzen processors. So this is pretty huge news, but it's some very shady circumstances. There's quite a lot to get into on this, and again, this is something that I discussed a lot on my stream. So if you're interested in learning more about this, then it's probably worth heading over to my stream to take a look. Basically, they claim a company called CTS Labs claimed to have found 13 different flaws in AMD, 13 different vulnerabilities. They've given them some pretty silly names, such as Rise and Fall and Fallout, which leads me to be a bit suspicious just from the start. It's a very strange way of naming it, very derogatory terms towards AMD, you know, purposely using, you know, things that sound bad, whereas if you look at the names of the vulnerabilities found in Intel, they weren't quite so aggressive, I guess. So that was one of the first things that kind of tipped me off that this was something weird. Later on, it turned out that they hadn't actually given AMD anything more than 24 hours notice about these vulnerabilities before they decided to publish the news. It very quickly swept through the media. Everywhere was reporting it as fact. And again, not much later than that, there were a lot of things being discovered through Reddit. So it turns out that the company had previously consulted with a trading firm which opened shorts on AMD prior to this news even going to AMD. So they told someone in the markets to start shorting it effectively before they even told AMD about the problems, before they even then told the public about the problems. The company in question is based in Israel, but it has only been around for a few months. It does look like they are a legitimate, you know, they're qualified individuals clearly, but the way they've gone about presenting this information to the world has been very, very odd, shrouded in mystery, I would say. So yeah, there's a lot of weird stuff going on. When the videos that they filmed were filmed in quite a strange style. And purposely seemed quite gimmicky almost, and attention grabbing, almost clickbaity, but for a video. And they even used stock background images for the video, which is really, really weird, instead of just, you know, filming it in their office. So overall, it's kind of shady circumstances. The vulnerabilities do look like they are real, but they look like they are very, very, very specific and kind of not really that vulnerable vulnerabilities. Effectively, unless you have access to the computer prior to someone else using it, physical access, then you probably can't do anything. And if you do have physical access, you still have to have a lot of admin rights and effectively reflash the BIOS onto the PC in order to even start doing anything. So it's a pretty long-winded set of vulnerabilities. If you want to take a look, then I would recommend the AMD subreddit. Has, you know, a lot of topics and threads going around about it at the moment. Next up, Western Digital and Micron got huge ratings upgrades. This is basically due to the NAND prices not falling as quickly as people thought they would. So, you know, their margins are better. It's really as simple as that. I guess demand is perhaps high. Western Digital got a ratings upgrade of around 32%, and MU got one for around 70%, which is huge. As you know, Western Digital is something that I've been quite fond of for some time. MU likewise, I've also traded this quite a lot, so I've been doing a few little trades here and there to try and gain some profit out of this movement. Finally, Microsoft have launched a cloud gaming department. So effectively, this is a service built on top of Microsoft Azure. It's currently being used by Ubisoft for Rainbow Six Siege, and yeah, it seems to me like Microsoft are really focusing very heavily on certain sectors. It wasn't too long ago that they closed down their Windows Phone section, then they closed down Groove Music. They seem to be focusing very heavily on gaming and on Microsoft Azure, which is good because Microsoft Azure is doing incredibly well at the moment. They're actually one of the best cloud service providers to go with if you're looking at integrating with cryptocurrencies as well. They work with Ethereum, they work with IBM stuff. Yeah, overall looking pretty good on Microsoft for a long-term hold, and I'm kind of intrigued to see where this goes and what kind of cool, unique services they can build. So on to the stats part of the video. This week I closed a total of 40 trades, 27 of them were profitable and 13 were not profitable. Average trade size was 0.83%, which is slightly below what I want it to be, but that's primarily due to the scale of drop that we saw in the crypto markets this week. Average trade profit was 3.5%, average trade loss was 43%. So I'll dig into that after I've just gone through these last two little bits of statistics. Most traded instrument was Bitcoin and Nvidia joint, so I took quite a lot of profit out of Nvidia this week. And our total profit this week is 6.1%. Minus 6.1%, I should say. It's a big difference. So why the massive trade losses? This is basically due to me closing several positions in Dash and Bitcoin. We were riding along a long-term support line, and the next level of support below that was way down at around 6,000, which was the low of this current correction. And I felt that there was a reasonable chance that we could go down that low, so I decided to remove some exposure. I actually did it at reasonable prices, and in Bitcoin I actually managed to get back in under that price and rebuy the position after effectively saving some money. But it seems that we've actually bounced off that following the news that came out from the G20, so unfortunately we have realized some of those losses to a certain extent. One thing that I feel like I need to note to kind of put this into perspective a little bit is that this week alone Bitcoin dropped by 25%. From Monday to Sunday it dropped by 25%. So losing 6.1% overall across my entire portfolio this week may seem really bad, but if you put it into perspective, when you consider that half of my entire portfolio is in cryptocurrencies, it's not that terrible. That being said, not good. I was really hoping to have a much stronger week this week and bring us back up into the green for March, but it's looking pretty unlikely now. I still think that there's a long way to go. I'm pretty confident following the move that we just saw that cryptocurrencies will go sideways for a bit though, so hopefully we will stabilize at this level and start to build up. So performance wise, for January we were minus 1.2%, not too bad. February minus 4.5%, not great, but we can live with that and we can recover from that. March we're currently sitting at minus 10.62%. Now bear in mind that these statistics are the ones taken on this page, are taken from my eToro portfolio stats page. So these include open trades. These include all of the trades that I'm currently hodling onto in cryptocurrencies. So it's kind of expected after that 25% drop in cryptocurrencies, and in some cryptocurrencies it was 40%, I should add. It's not too bad. I know this looks very bad at the moment, but hopefully you guys can remain calm and stick with it. I think it is unlikely now that we will see green in March. I'm hoping for a breakout sideways in cryptocurrencies, as I mentioned before, but it could well be another month or so until the cryptocurrency market starts to really recover. So what am I looking forward to? We need some positivity, right? First of all, as mentioned last week, additional cryptocurrencies coming to eToro. Don't know when it is, we don't know what they are, we just know that they're coming and that they're supposedly coming quite soon. That's all we know about it, but something to look forward to at least. The other interesting thing is South Korea have suggested that they did an announcement of an announcement basically, and said that they have new cryptocurrency policies coming out specifically for cryptocurrencies. So this could be good news actually, because it'd be nice to see an attempt at regulations that really were customized for cryptocurrencies, because it's not the same as stocks, it's not the same as investing in like angel investing or hedge funds, and it's not the same as a currency either, really. You know, cryptocurrencies are really quite a new and strange thing, so it'll be interesting to see where they go with that. And finally, of course, the last thing we're really looking forward to is the crypto prices recovering. As I've said, you know, March was going to be the make or break time for cryptocurrencies, to see where the market's going, to see a potential bigger reversal heading back upwards. And currently it looks like a sideways move to me, as I mentioned, but we'll see where it goes. We should know probably by the end of next week's video. We should have a better indication of if the market is moving back towards a bull market, if it's going to go sideways, or if we're going to end up in a bear market, in which case we'll start to try and short the markets a bit more actively. So that's it. Thanks for watching, everyone, and I will see you guys in the next video.